Hello, it's your girl again, Perpetual, and I welcome you to my channel, Pep's Financial Tips. Good to see you again, and I hope you have subscribed. Today's discussion is on inventory valuation. Inventory valuation. Now, we are in 2026, and I'm sure we have either finished preparing our 2025 account or we are in the process of preparing it. Now, our discussions all along, we limited it to retailers. Now, in calculating your cost of sales, the big question is how did you value your closing stock? How did you value your closing stock? Because the opening stock, I don't have control over it. You already brought it forward from 2024. Now, how did you value your closing stock? Valuing the closing stock is very important because it has its negative impact on your cost of sales, at the same time on your gross profit. Once you get it wrong, your gross profit will also be wrong. Either you overstate it or you understate it. Now, how do you arrive at your cost of sales? We all know the opening stock, then you add your purchases in the year to arrive at cost of goods available for sale. Then you subtract your closing stock. Why is this closing stock very important to me? It is important because if you get it wrong, your calculations going forward will all be wrong until your net profit or loss. Now, in calculating the cost of sales, you have your opening stock. So assuming your opening stock is 200,000, opening stock 200,000. Then your purchases, let's say 300,000. 300,000. That gives you 500,000. Now, you have, let's say you have valued your stock, and then your closing stock is giving you 250,000. So you take your 250,000 from it. So your cost of sales now becomes 250,000. Assuming that in calculating your closing stock, you made a mistake. You overvalued your closing stock. Okay, you overvalued the closing stock. So instead of 200,000, you entered 250, giving you what, a cost of sales of 250,000. Now let's do this. So our sales is 550,000, and we are taking 250,000 out of it per the original calculation. So if we have 550,000, you are taking 250,000 from it. Your gross profit now becomes how much? 300,000 per your first calculation. Now you realize that no, the calculation was wrong, but you've already done all those calculations. I'm just giving an example. Assuming you overvalued your closing stock, let's do this again. We are saying that our opening stock was 200,000, and then our purchases 300,000, giving us 500,000. And we were saying that we overvalued the first closing stock. Now, the closing stock now, after doing it right, we are saying is 200,000. So when you take 200,000 from the 500,000, your cost of sales now becomes 300,000. When you now take this 300,000 from the 550, which is your sales, you arrive at 250,000 as your gross profit. So have you seen the difference? The first one overstated your gross profit. It gave you a gross profit of 300,000, whilst after doing it right, you now got a gross profit of 250,000. So what are some of the things that will happen? I'm just mentioning two. Later we'll continue. I don't want the videos to be too long. Now, the first one is that you have overstated your profit. And what is the implication? You will pay more tax on that. Assuming after deducting all the other things, you still have a net profit. You pay more tax on that. Then the second one is you will be deceiving yourself as though you are being profitable as that high, oh, you are being profitable, whilst in actual fact, you have not made that much profit. So your projections, your calculations, and everything, you will get them wrong. So it is very important to actually value your stocks right. Now, um, what does the standard say about valuing your stock? We are limiting this to the retailers. The standard says that you value your stock at lower of cost and net realizable value. Lower of cost and net realizable value. There are two things involved here: cost and net realizable value. Please, in our next video, we'll talk about what constitutes a cost and then the net realizable value and how you use that in valuing your stock. Thank you so much. I hope you have learned something today. Kindly comment, like, and share. See you in the next video. Bye.